Good morning, Tuesday morning, August 16th, Stan Ehrlich. We have a slightly lower opening originally. We are now an hour and 2 hours and 10 minutes into the market. The original slightly lower opening led to a little bit more of a drop-off, and the spider, my favorite, SPY, we only got down to the middle of yesterday's range. For the DIA, the Dow Jones, it's about the same, but it held up a little bit better. Didn't make a new low in the first half an hour. Spider did by a modest amount. The Qs opened a little lower and dropped completely down to a little bit lower than the previous day's lows. Now, that's the first one to have any significant lower low in the last several days. The 2000 is very similar to the spider, but on the weak side and hasn't even gotten up to the high of yesterday, whereas again the DIA is well above yesterday's high. The spider got a little bit above yesterday's high, and the Qs did not, and the 2000 did not. Now, that means the DIA and the spider are vulnerable to a potential bearish engulfing. If they would drop down and start to make new lows and then make it below yesterday's low, we will have the idealistic Ehrlich reversal signals, overbought conditions on a custom RSI, and a bearish engulfing on the daily data chart. Plus, we have reached a significant resistance area in the spider, the top of this red zone, which I drew months ago, has been tested again yesterday and today, and it is a general significant resistance area, this red zone. We bumped up against it a couple of weeks ago and stalled out for a few days and then managed to plow through it, and now we're at the top. So again, it's extremely vulnerable at this resistance level. Plus, we've now finally reached the minimum upside objective on a head and shoulder bottom formation that formed in the last few months. Erasing a couple of lines here real quick. And there's the shoulder low. This is the head of the formation at around 362. And there's the last shoulder low in a little bit of a support area. Up we go, broke the neckline, did something you're not supposed to do, dropped below it again the next day, but it immediately recovered, and off you go. Minimum upside objective is 430, give or take a small half a point or so. We're there. We made it. Does that mean it's the end of the bull move? Not necessarily. It is a minimum upside objective, as I've been saying. It can go farther. Coupled with the fact that we're overbought, and the fact that we're at a resistance area, and that we reached an upside objective on a pattern, I think there's a very strong likelihood that we're looking at the beginning of a downturn. We're looking at the very highest highs that the market may reach, but I'm not ready to say go short yet, or get out of longs, take profits, whatever, or buy puts. While, any strategy that'll make money on the downside, but I'm very close to saying that, and I will scream bloody murder when I think it's happening or has just happened that same day, or is about to, if I can figure that out. That's the same kind of commentary for the DIA. No change in comments. The Qs simply were overbought and may not necessarily get higher than yesterday's high, in which case we will at that point be having an outside trading range. It's already made a lower low in the Qs, so now we're looking for a higher high in order to get that bullish, in order to get an engulfing range. Once the higher high is made, you can see that we would be very close to the previous day's close, and all it would take would be a very minor dip back down again to turn the net change to red, lower than the previous close, and a bearish engulfing in an overbought condition after it has reached its objective, which was actually about 3 days ago, and it stayed at the same high 2 days ago. Yesterday it made more progress and obviously went past the minimum upside objective, which is the green dashed line. And today, lower low, but not a higher high yet, just coming back to where it opened. I think these indexes are extremely close, time-wise and price-wise, to turning down. And this next significant leg down, looking at the daily data chart on the spider, I think is going to make a lower low for the whole trend. That's below 360. That's a big move. We're at 430 almost. And my minimum downside objective is about 330, I think, 320. And that is based on the formation that it developed to build a big top, which was during the summer of 21 and into the spring of 22 here. So it was a year-long top formation. So I am bearish long term. I am bearish intermediate term. And short term, I think I'm about to abandon my friendly attitude, and I say friendly because it's a bull move in a bear market, in my opinion. Any minute. If this market starts to blow away previous lows made within the last few hours, especially for the whole day, we could have started this next major multi-month move down. One other comment, by the way. What is this? August? Of course. And it's the middle of August. You next have September, last time I counted, and then October. Now, October is significant. There's such a thing as called the October lows. It has a very high percentage, somewhere in the high 80s, maybe low 90s. In the last 30-some years, the market has had a low, a bottom of some significance. Sometimes it's fairly minor, sometimes it's a whopper during the month of October. It's not necessarily smack in the middle. It could be the first day or two, could be the last day or two, but it is in October very frequently. So if you're going to have that happen again sometime in September and maybe in August, we're in August, you start the move down into October. There's a bunch of things that correlate. So I am looking for a turn down. It ain't happening yet. We're basically high and last at the moment. But it always starts with a tick. Have a good day. Thank you very much. Recording over.